How high can Bitcoin go in 2024, and could we see a correction moving into the halving event? Let's go ahead and jump into the charts. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we're going to be taking a look at the potential top of 2024. How high could Bitcoin theoretically move to in 2024 based on historical price patterns? We'll also be taking a look at the macro charts, the 4-year cycle, the short-term price action moving into the ETF, and of course, the likelihood of a few months of downtrend moving into the halving. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and structural information, and the relevant economic news. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you were interested in, join us on Telegram. It is the third link down below. You will get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. If you are interested in joining our VIP group, we post trading setups with exact entries, exact targets, exact stop losses, trade justification, and exclusive analysis. You'll also get access to our group chats, our general chat, our trading chat, education chat, our help chat, trade setup chat, daily video chat, and of course our news chat. If you're interested in getting access to all of that, go ahead and contact me in the pinned comment of the free channel for more info. Without further ado, guys, let's dive in. So starting on that market data. How are we looking? 24-hour volume is up 11.42%, sitting at a total of 82 billion. 24-hour liquidations have jumped up 26.5%, sitting at 129 million. Looking at the volatility index, we can see on the 30-day period and the 60-day period, not all that much change. We are seeing a lot of stagnation in the price action. So with that consolidation, with that compression, we generally see volatility move sideways. On the 30-day, that is exactly what we are seeing. And of course, on the 60-day, more or less, that is what we are seeing over here as well. Moving over to those liquidations, taking a look in more detail of the 129 million, 93 million came from long positions and 35 million came from short positions. Moving over to the DXY has broken out of its multi-month downtrending diagonal trend line. This, of course, being the downtrend the DXY has been in ever since the top at around November, and of course, the next resistance we retested at in mid-December. So we've finally broken out of this 2-month-long downtrending resistance, putting the DXY actually now into a short-term uptrend. We are looking for a continuation upwards for the DXY, potentially as high as around 105. However, guys, we do have to keep in mind that the DXY is very much reliant on economic news, such as inflation data, such as interest rate data, and we do have inflation data coming up very, very soon. Only in a few days from now, 3 or 4 days from now, we have got core inflation and inflation data. The day after, we have got our PPI data. So depending on what results we get for these news releases can massively determine the direction of the DXY. If we find out inflation is continuously falling, we will likely see the DXY correct lower. Irrespective of the fact that it did break out of this trend line, we will likely still see a correction. A correction to DXY will push asset prices higher. If we do, however, by any chance expect or see the inflation rate increase or be higher than its consensus, particularly higher than the previous, we will definitely see the DXY move upwards, and this will add some short-term selling pressure to the financial markets. Keep that in mind. Moving over to the S&P 500, we can take a look at this. The S&P 500 has been moving upwards and has now created a brand new top. This top being at around 4,841. However, this top has been marked as deviation as we fail to sustain above this area of support, now resistance. Breaking back below, entering a short-term downtrend, we are expecting a correction to retest the 4,635 level of support, or the confluence point of this diagonal downtrending resistance. So we're looking for a short-term correction into this range. And the same goes for the Dow Jones. Let's go ahead, guys, and jump over to Bitcoin. So in today's video, we're going to be discussing a whole bunch of things. We'll be taking a look at Bitcoin dominance, we'll be taking a look at the total cost to market cap, we'll be taking a look at the macro charts, the 4-year cycle, projections for the 2024 market, and of course, 2025 top. We'll also be taking a look at the macro charts from a structural perspective according to the 4-year cycle, the short-term price action and next potential moves, and of course, the upcoming ETF data. So before we get in, a quick word from Bitget and BingX and we'll dive in. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Okay guys, let's go ahead and dive into the video. And as you know, this week is a massive week for cryptocurrency as we have the first final deadline for one of the ETFs, which is going to be the ARK 21 shares Bitcoin ETF for ARK investments. This is going to be on the 10th of December US. So in about 3 days from now, it is going to be the final deadline for this ETF. Now, as we know already, guys, this is going to be the final deadline. And with that, the market is in a state of disarray. We are kind of in this area of unknown and area of indecision. We're seeing a lot of compression, a lot of consolidation, a lot of sideways chop with these semi-large wicks toward the upside of these failed breakouts and larger liquidity moves toward the downside, which are more or less liquidation moves. Based on what information we get from this ETF is very likely going to determine the directional move for Bitcoin, as the price action seems to be very much in anticipation or leading up to hedging to that ETF news. Meaning, when we do get the ETF news released, we're likely to see a lot of volatility and we're likely to see the price action move in the direction of which the news actually comes out. If we do get an approval, we're likely to see a move upwards for Bitcoin and break out of this inevitable range. And if we do see a delay or a rejection, we will very much likely see a correction for Bitcoin within this range. So two very, very interesting things. I also do want to mention we do have pending ETF deadlines up until March 18th, I do believe. So even if we do see a delay, we will have this ETF narrative continue forward. Now, if we do see a rejection of the ETF, this could potentially shift the narrative for the ETF news into a potential rejection for the other ETFs. Remember, guys, narratives are built, set, and then confirmed. So if we do see a rejection for the first ETF, the narrative could shift to, we could potentially see a rejection for all of the ETFs, and the market will heavily correct in anticipation for that worst case scenario, just as the market heavily moved upwards in anticipation for the best case scenario when we started hearing about approvals for ETFs. Keep that in mind, guys. But let's go ahead and focus on the charts, because that's what we're here for. We don't care about that stuff. We care about what the charts are telling us. We believe everything can be derived from the charts. So first and foremost, let's talk about that main point. How high could Bitcoin go in 2024 according to historical data? And when would we expect the all-time high for Bitcoin according to the 4-year cycle? So to answer that first one, what we've done is we've gone ahead and drawn out the 4-year cycle here, a very detailed chart. I actually posted this chart on Twitter and in Telegram. If you want to go ahead and copy it down, it's a fantastic chart as it details not only the 4-year cycle, but the different cycles, the highs and lows. More importantly, the main levels of resistances within these cycles, these dotted trend lines and these dashed trend lines, and of course the date range trend between tops and bottoms and from bottoms to tops. That is what we're focusing on over here right now, the days between tops and bottoms. If we take a look, guys, at the days between tops and bottoms, we can see that the main difference, or should I say the main similarity, is between our low in our first cycle and our all-time high at the end of the first cycle. We had 1,064 days. If we look at the second cycle, between our low of the second cycle, okay, and the top of the second cycle, we had 1,064 days. This is the exact same amount of days we had in the first cycle as we had in the second. It gets even more interesting. If we take a look at the second cycle, from the all-time high of the first cycle, okay, to the low of the second cycle, we had a total of 364 days. If we take a look at the all-time high of the second cycle, and then again apply the distance to the low of the third cycle, we had 364 days, the exact same amount of days we had in that prior wave. So if we go ahead and apply this forward now, we can assume 1,064 days from the low of the third cycle will take us to the all-time high of the third cycle. That is going to bring us to a date of the 6th of October 2025, marked out by this vertical green line. So that is when we expect the 2025 top to be in, as of right now, provided a few validation points are not broken. We'll come back and discuss those in a second. So how high could Bitcoin theoretically go in 2024? If we take a look at the third year, because we are in the third year phase now of the third cycle. Year three over here, and year 3 over here. If we take a look at the price action did within these years, we notice something that occurred in both cycles. That was, in both cycles, Bitcoin moved upwards to retest the dotted trend line. I hope you guys can see it. The dotted trend line within this cycle phase, and that dotted trend line is actually reflective as the all-time high from the prior cycle. The all-time high from the prior cycle. So assuming Bitcoin follows suit, we would expect two things. Number one, the price of Bitcoin to be much higher than it is now at the end of 2024, and within, most likely during the end of 2024, we should see Bitcoin reach the all-time high of the prior cycle, which is sitting around $69,000 to $70,000. That is what we are expecting as per the 4-year cycle. Now, both of these points we mentioned, the $70,000 target for 2024 and the all-time high at the 6th of October 2025 are based around or require a few things to actually validate. We need to see, number one, a traditional 4-year cycle actually activate. We have not quite yet seen the traditional bull run activate within the 4-year cycle. And number two, we have the potential threat of economic news or overall market news such as ETFs that could either accentuate and speed up the movements within the cycle, thus breaking the 4-year cycle in a positive way, okay, or breaking it in a negative way if we see a rejection. Okay, so let's go ahead and take a look at that now over on this chart. So what do we need to see from a structural perspective for a bull run to start and for us to enter that next phase, okay, which is going to be the bull run phase? We take a look over here, we have 3 phases. We have, again, the capitulation phase and bear market phase from the top to below. We have the accumulation phase, which is every bit of price action from the low towards the dotted trend line. And then we have the bull run phase, which is all the price action above the dotted trend line. To show you again over here, we have, again, the bear market phase, okay, the accumulation phase, everything occurs under the dotted trend line, and then above the dotted trend line, we have the bull market phase. So going back again, we'll show you one more time. We have the bear market phase, we have the accumulation phase, and then we have the bull market phase. Notice how the accumulation phase is while the price action is underneath the dash trend line. In this instance, the dash trend line is sitting at a price point of 48,000. So according to historical trends, we are not actually yet in what we would call a yearly bull run, okay? We are in a strong macro uptrend. That has been a fact for a very long time. If you've been following the channel, guys, we have been bullish as heck on Bitcoin ever since 16.5k and officially flipping mega bullish when we broke above this downtrending resistance at 19k on Bitcoin. We've been bullish on the weekly, we turned bullish on the monthly when we broke above 32k, and we are still very much macro bullish. However, guys, according to what we have seen historically, and according to, validating what kind of type of trend we are in, we are not yet actually in a bull market, according to the 4-year cycles definition of a bull market. The 4-year cycle definition of a bull market requires a few things. Number one, we need to actually get past the halving event. Every single time we see this aggressive continuation upwards, which is what we define as a bull market on the macro scale, is done so only after the halving event. The halving event is marked out by this horizontal, should I say vertical green line right over here, as it has been done in prior cycles, okay? Number two, we need to see a monthly candle close. Okay, this is a very important one. A monthly candle close above the dotted trend line. We saw a monthly candle close above the dotted trend line. We saw a monthly candle close above the dotted trend line. This actually pushed Bitcoin out of the accumulation phase, which we actually showed you on this chart, into the bull run phase. How can we be sure? How does it matter? Why does it matter? A trend angle analysis from the lows to the breakout is 37 degrees. From the breakout to the top is 67 degrees. A significant shift in the trend angle signifies a significant shift in momentum, velocity, and strength of the trend. We applied that same technique to the next phase. From the low to the breakout, 32 degrees angle. From the breakout to the top, 55 degrees. We can see already a significant shift in strength on the macro scale when that dotted trend line breaks. And the next thing we are looking for is going to be, of course, number one, the break of the Ichimoku cloud baseline on the monthly chart. You can see we just kind of closed underneath that, or like right on top of it, according to the last monthly close. We do need to see again that close and the price action remain above that level to push higher. So those are the three things we're looking for. Those are the verification targets. And of course, that is what we expect on the macro scale. So if we do not see any of these things play out, we would expect, again, a correction. So looking at prior data, could we see a correction over the coming months? The answer is absolutely yes. Why? Well, it's very simple. In historical phases of the 4-year cycle, we never saw a monthly candle close above the dotted trend line until only after the halving. The halving event is still around 2 months away, and therefore we would not expect a monthly candle close above 48k until after April 2024. That opens Bitcoin up to a potential short-term correction between now and April, as we are approaching a major high time frame resistance, which is at 46 to 48k level on the macro chart, as well as on the total cryptocurrency market cap. We are within a major area of resistance at this $1.5 to $1.6 trillion level on the total cryptocurrency market cap. Again, an area of macro resistance, telling us that if we are going to see any sort of high time frame correction, it will develop from this current range. So, are we going to break through this range, or are we going to see a correction? If so, how low could we go? If so, how high could we go? Number one, if we do see a breakdown, we are looking for our lower targets. All of these lines you see here are areas of support. 40k, 38k, and then the major macro uptrend, right? These are our two horizontal supports, 38 and 40, that we need to remain above, because if we lose these levels, we run the risk of retesting that macro uptrending support. If we retest this, we are in a little bit of a sketchy position, because if we do lose that trend, we technically lose a 1 year long uptrend for Bitcoin, and that could pose a risk at two things. Number one, delaying the 4-year cycle, or even possibly invalidating the 4-year cycle. This would be very, very bad. A retesting it would be very sketchy, but breaking down would be very, very bad. The most ideal scenario is we remain above 38 to 40k the entire time. Let's go ahead now, guys, and discuss the short-term price action. So what we are seeing here is a whole bunch of compression and consolidation. There really isn't isn't too much to go over, as the same thing has been happening now for days on end for Bitcoin, basically the entire month, right? From the start of January, it has been nothing but this slow chop sideways. With Bitcoin dominance rising again, we have seen altcoins actually bleed quite a lot. Bitcoin dominance is looking like it is projected to continue upwards to this 56-57% range. We're expecting that to retest this local low. So we are expecting altcoins to potentially be lead a little bit more if Bitcoin remains sideways or drops. If we do see Bitcoin continue upwards, we do need to break above this resistance to see that continuation higher. If we do break above, we expect 45.5k. If we do see a loss of the POC, more importantly, the loss of this horizontal support line, we could see a correction back down towards this green area, which is 42.4k. It is very important to note, excuse me, this is a parallel consolidation. We are not very concerned about what happens within this range, as it is significantly choppy. We are much more concerned about the reaction of Bitcoin at the upper area or the lower area of this range. If we see a breakdown over here, that would send Bitcoin to 38k. If we see a sustained break over here, that would push Bitcoin up to 46 to 48k. Okay, guys, the ETF news is going to play a massive role in determining where Bitcoin goes in the short term, so pay attention to that. Moving into economic data, we have a significant amount of high impact news events coming up over the next 4 days that could significantly throw a curveball in the market, throw a spanner in the works of a term to use, increase volatility, and make the trading conditions a whole lot more choppy and difficult. So keep your risk management tight, as we've been saying all month. Trade every single day today, this month, in consideration that every position you take is of high risk. This whole market environment right now is incredibly high risk, as we have multi-month narratives coming to an end. The ETF news has been a multi-month narrative, started all the way back in, I don't know, I can't even remember when it started. It started the year, last year. It is now coming to that decision point. So we're going to see a whole lot of volatility. Thanks for watching, guys. Hope you have a fantastic day. Check out the Crypto Academy courses, a 10-unit course that you'll get access to lifetime. It gives you updates, analysis, education, focus on market patterns, technical indicators, investment strategies, how to manage your risk, and of course, market psychology. If you're interested, go ahead and contact us via the email. It is somewhere on here. Here it is, the email over here. You can contact us for more info, and we'll catch you guys in the next one. Cheers.